Your Credit Matters segment today. 5 steps to buying a home after bankruptcy. And obviously, that's after you talk to our friends at creditsanitizer.com, because I'm going to share with you that even before I look at this report that we've got right here, is I've seen so many credit reports of people that have filed bankruptcy, and their credit reports are wrong, right? The credit bureaus, I'm not going to say they intentionally are suppressing your scores, but I will say that they sell a lot more low score reports than they sell high score reports. So what do you think? If you follow the money, which way are you going? Just throw that out there for you. Okay, Mr. Norton, I think I'm still younger than you, so don't give me a rough time there, buddy. So let's take a look at this. If you're one of the millions of Americans who have declared bankruptcy, financial recovery can seem like a pipe dream, but don't give up. According to a study by the Consumer Financial Protection Bureau, people's credit scores increased steadily after filing for bankruptcy. While any credit improvement is good news, isn't it enough to offer a chance at home ownership? Here's what you need to know about buying a house after bankruptcy. 5 steps to buying a house after bankruptcy. The good news is that you can still buy a home after bankruptcy. However, your journey may require a bit more effort, organization, and time than the average prospective homeowner. You'll need to wait until a judge discharges your bankruptcy before you can get a loan. Beyond that, it largely depends on how quickly you can get your finances in order. Bankruptcy is not something anyone wants, but for people in dire financial trouble, it can be the only way to wipe out liabilities and get a fresh start. Bankruptcy can reduce financial stress, letting you focus on making positive financial decisions for your future. If you're ready to move forward and make your dream of owning a home a reality, start working on these strategies today. And I'm not going to give you here any legal advice. If you want legal advice, you can give me a call, and I'll put you in touch with some great bankruptcy attorneys that we chat with on a regular basis and provide great information for our listeners. Number 1, reorganize your finances. Once some of your debts are discharged in bankruptcy, you'll be on the road to recovery. But don't rush out to get a home just yet. Wait for the dust to settle and get your finances in order. Examine your debts and credit report. Take stock of where you are financially now that a few of your debts have been discharged. Next, get a copy of your credit report. If you have a copy of your report prior to filing bankruptcy, use it to create a before and after picture of your finances. Make it a regular practice to review your credit so you can proactively watch for any mistakes and get them corrected. It's also encouraging to see the progress you're making over time. Again, cleanall3.com, cleanall3.com. You get a $1 credit report, and then you can monitor it from there. It costs a little bit each month. But again, cleanall3.com. Put a budget together. Take control of your monthly household budget, paying every one of your bills on time, every time. Figure out your monthly income and expenses so you know what you have room for and what you do not. Anticipate upcoming annual costs like taxes or car registration, and put some money aside so that you are not scrambling to scrape up funds when these costs are due. Consider a credit card. You can also start building your credit by using a credit card to pay some of your monthly bills. If you choose to do this, make sure you use the credit card like cash and pay it off every month before your statement closing date. rsrccpayment.com. rsrccpayment.com. If you keep a close eye on your budget, pay all bills on time, and monitor your credit report, you'll start to see positive changes that will get you closer to buying a house. Number 2, grow your savings. If you're interested in buying a house after bankruptcy, building up your savings is one of the most important things you can do. Now that you've refamiliarized yourself with your finances, it's time to start saving. Figure out how much you can save. One of the positive side effects of bankruptcy is that you'll have the breathing room to start putting away a little bit of money every paycheck, and it does not matter how small that amount is. It's helpful to get into the habit of saving, even if you can spare only $5 every 2 weeks. Of course, the more money you can save, the better, but start saving no matter how much you can contribute. An easy way to develop the habit of saving and putting money towards your down payment is to use a forced savings method. With this method, the money is put into savings before you even see it. The The most common technique is to schedule an automatic deduction from your paycheck or checking account that transfers directly into a savings account. Roundup apps are another easy way to save. They work by siphoning away small amounts here and there as you purchase daily necessities. You might not notice the difference between a $1.75 purchase and a $2 purchase, but over time, you'll appreciate the increase in your savings account. Set an objective. After you determine how much you can squirrel away each month, set a goal amount for your future home's down payment. It's recommended to put down 20% of the overall purchase price when you buy a new home, although you can get some home loans with smaller down payments. 20% saves you money on mortgage insurance and your monthly payment. It also gives you some instant equity in your new investment. The FHA loan, 3.5% down, is a great product as well, because think about this: even though you're paying mortgage insurance, rent is the same as 100% interest because you get nothing for your money. Number 3, make a plan. There's more to home ownership than signing on the dotted line and paying the mortgage every month. For example, as the homeowner, you're responsible for any surprises that come up, which can be anything from a clogged drain to a new roof. Extra expenses like these are part of the home ownership package. If you're intimidated and worried that it might be too hard to buy a house after bankruptcy, take it slow. Give us a call. We'll walk you through it. We'll set up a game plan. The following suggestions will help look at each piece of the puzzle without becoming overwhelmed. Calculate what you can afford. In addition to saving up for a down payment, you should adjust your monthly spending to account for the overall cost of maintaining a home. Conventional wisdom is that you shouldn't spend more than 30% of your income on housing expenses, including the mortgage payment. Before you set your heart on the Darling Craftsman house, use the online calculators we have available to find out exactly how much you can afford. Schedule an inspection when you're shopping for a home. Make sure you get a thorough appraisal and home inspection to help identify any potential problems that need to be fixed within the first few years. If you don't think you'd be able to afford those repairs, consider moving on to a different house. You don't want to fall into credit card debt because of a surprise furnace replacement. Consider additional costs and factors on top of significant home repairs. You should also prepare for regular maintenance such as landscaping, pest control, and snow removal if you're in one of those snow areas. Depending on your location, you may also need extra insurance for floods or earthquakes. Number 4, organize your financial documentation. Because you went through a bankruptcy, you know what it's like to compile months or even years of pay stubs, account statements, tax returns, lists of assets, and other financial documentation. While buying a house after bankruptcy isn't as rigorous as going through the legal process of reorganizing your debts, many of the same records are required for mortgage applications. If you know you want to buy a home, you should start keeping meticulous financial records right now. Having organized financial records shows that you are sensitive to the details. If you have a finger on the pulse of your finances, you'll know what your budget is, what your net worth is, and when you are creditworthy for a home. And unfortunately, even in an electronic world, paper is still king when it comes to mortgage approval. You should keep both electronic and paper records. Have a copy of your bankruptcy petition ready and add it to your credit report and bankruptcy discharge documentation. An easy way to get your financial documentation organized is to split them into different categories. Bank, credit card, loan statements is one category. Investments is another. Tax records is another. Insurance documents, legal documents, employment records, medical bills, all of that. As you get closer to making a home purchase, find out in advance what documents the lender requires. You'll probably need a lot less than you think. Number 5, shop around for mortgages. Yes, our team does work as a private shopper. We'll look at a lot of different options for you, a lot of different sources for you. Determine which loan type you need. Consider what type of loan is best for you. Conventional loans are offered by private lenders like mortgage companies, credit unions, and commercial banks. These loans tend to have more rigid criteria for approval, but include more flexibility after the loan is secured. Government loans are also available. The best known government loan is the FHA loan, which is backed by the Federal Housing Administration. These loans usually have more flexible income and down payment requirements. However, FHA loans often restrict your ability to rent out or flip the property because these loans are intended for first-time, low-income homebuyers and others and are expected to make the house their primary. Yes, you've got to make the FHA your primary property. Just throwing that one at you as well. Thanks, Sergio. I appreciate that. Appreciate you checking in with us as well this morning. Know your interest rate options. There are a lot of them. Again, get a total cost analysis. If you're not getting a total cost analysis, you're not getting a total benefit picture. You really need that. Find out what the fees and expenses are. Every loan, every lender has different sets of fees and expenses. Now, there are some that are going to be the same across the board, right? It doesn't matter whether you're buying property A, property B, property C. The title fees, the escrow fees, those are going to generally be done by the seller. Is going to probably select who the provider is. So be aware of that. So bottom line, home ownership after bankruptcy, there is life and home ownership after bankruptcy. You've been given a chance to build a new financial future. Start with a clear understanding of where your credit stands. Cleanall3.com, cleanall3.com. Get that credit report. Costs $1. If you can't afford $1 for a credit report, you're probably not ready to start buying a new house yet. Just my thoughts right there.